This market just flipped the script. Inflation cooled. Coinbase joins the S&P 500. And meme coins are erupting again. But here's the kicker. What looked like a derivatives-driven fake out yesterday is now showing real spot demand today. Let's break it down. We're going to start with derivatives. CVD, this right here, is pushing higher while price follows. A key signal that real buyers are back. So this is not a squeeze. Open interest, right here, is rising with price, meaning new long positions are entering, and this confirms bullish conviction, not short covering. Funding rates, right here, they remain positive, but not overheated. Bulls are in control, but we're not in euphoria. ETF flows from yesterday. This little tiny thing that you probably can't see right here was yesterday, May 12th. Net inflows hit 5.2 million. Tiny, but at least it wasn't red. Okay, this makes 16 of the last 19 days green. Even with CPI hitting, institutions are still buying. BTC futures volume, let's get there. BTC futures volume was at 54.8 billion, and Ethereum futures volume was 26.5 billion. Binance, OKX, and BitGet are leading. CME still active with 7.2 billion. Historical BTC volume is surging. Now matching the levels from the March breakout. This confirms real participation. Yesterday, we said the move was derivatives led, and it was. Today, the data flipped. That's why we update daily to stay honest with what the market is actually doing. Now let's get to Bitcoin. Bitcoin technicals. We're looking at the daily Bitcoin. Bitcoin is hovering around 104,000. It's actually at 104,205. Getting back a lot of yesterday's losses drop. All right, showing signs of this basically sideways consolidation. RSI is elevated. Okay, it's at 71.53, but there's no divergence yet. We're entering a thin resistance zone. Okay, as you can see right up here. The next major level sits between $108 and $110,000. Key support sits near just above this line right here. It sits near 98.5 to 99,000. If we retest, that's where bulls must hold. So we basically have to hold the zone that we took weeks to get out of. Okay, all right. So at least minimum we got to hold this area, like I mentioned yesterday. And on the weekly, today it's green. Okay, the weekly candle. If this closes Sunday, we got a long ways to go. But if this closes green, that's going to be 6 weeks in a row, guys. That's going to be 6 weeks in a row. Very, very rare. We're pressing the top of the macro rising channel. Okay, we're pressing the top. We're right up against it. All right, but we get out of this area, guys, which is basically at all-time high territories. We get out of this little area right here. We're gone. Price discovery once again. So as long as BTC holds $100,000, this structure targets the $110,000 to the $120,000 zone or area or price points next. All right, so good news right there, guys. All right, but we got to hold 100,000 right now. We're at 104,204. Let's go back here to the daily and let's look at the macro landscape, starting with the DXY. DXY rejected on the 101.9, which is where the 50 EMA is right here. As you can see right here, boom, rejection. And now it's at 101.014. That's risk on behavior. Let's see. This might have been a fake out right underneath this blue line. Let's see if this might be a fake out over the blue line. Let's see what happens. Yields. Let's take a look at yields. 2 and 10, still climbing. 2 is climbing. 10 is also climbing, but not yet panicking. Okay, market is absorbing the inflation print. VIX and the inflation print came out today. It was better than expected. We'll discuss that too. VIX lost to 200 really easily, really quickly. I thought we were gonna at least bounce there. Nope. Boom. 17.88. I am happy to be wrong. Collapsing to 17.88 near April lows. Another risk on confirmation. What does gold tell us? Let's see what gold tells us. Gold is holding at 3,250, let's say, but underperforming Bitcoin. Okay, so rotation is clear based on that. rotation to risk assets, by the way. Now, let's take a look at the indexes. Dow Jones, that's what Dow looks like. The NASDAQ looks very strong. And the S&P 500. All right, they all rallied post CPI. CPI came out today. Though right now, the NASDAQ, I mean, the Dow Jones is actually red, but it did rally when the CPI came out. That is strong alignment between crypto and equities. So the takeaway, macro is currently a tailwind. Just watch yields. We got to watch the yields. 2 and 10 are going up. They could still spoil the party. Hopefully not, but it's possible. Okay, we got to keep looking at this stuff. All right, now let's get into CPI and smart money AI trend models. Okay, for that we get a lot of the information from Twitter. Let's see. CPI for April was 3.4% headline and 3.6% core. Right. Core CPI came in slightly under expectations, showing slow disinflation. Month over month equals 0.3%. That's Fed friendly. Markets rallied and the AI models flipped bullish this morning. The Twitter AI models, you call it Grok models, both the cumulative flow model and 5-day moving average trend moved up. What this means. AI-based fund behavior or smart money is shifting from defensive to opportunistic. They're allocating back into crypto and it's visible in the flows. Okay, so essentially smart money is buying back in again, guys. Okay, and also funds that are algorithmic. Okay, AI led funds. Okay, AI based funds as well. Again, smart money. 90-day tariff pause. Let's talk about the US-China tariff pause. I wanted to expand on that a little bit. Okay, on May 12th, the US and China agreed to pause tariff escalations for 90 days. Tariffs on Chinese goods dropped from 145% to 30% and vice versa from China. EVs and solar gear are still restricted, but $600 billion in goods are getting tariff relief. This softens the global tension and pushes capital into neutral, apolitical assets like Bitcoin. Bitcoin becomes even more attractive as reserve collateral in uncertain trade environments. And now let's take a look at ETH right here on the daily. Was there ever really a doubt? For me, there wasn't. When people were seeing this, I could see that's when there was doubt. ETH broke through the 200 EMA. As you can see, we're surfing above it, and now trades at 2,633.98, 2,635. RSI is at 81.18, but there's no bearish divergence. This thing could keep going. It could still stay overheated for a little while longer. Okay, we may be entering the Ethereum rotation phase. Bitcoin is steady, Ethereum is catching up, and memes are riding that wave. That's why I've been watching Ethereum lately, okay? Because of the memes, guys. Speaking of, let's get to it with Miggles. Base memes. Guys, base memes, guys. Why base memes? I'll tell you at the end of this. First, let's get to it, Miggles. Pressing into macro resistance at 6 cents. Okay, right now we're at 0.056. Volume is rising. A breakout here flips the entire chart bullish. So we need to get past 6 cents, guys. We need to get above and beyond that, and Miggles could go on a nice little run. Eventually it will. Look at Toshi testing key supply near 3087 needs to break and hold for a continuation. I'd really ideally like to see it stay above 3073, and yeah, if we can we'll extend this like this. If we can kind of get over this area right here, it gets a lot easier, guys. But I mean, I think Toshi already did the hard part here, and now this up here going forward is not as hard. Okay, so Toshi is looking very strong at 3086. KeyCat RSI is hot at, well, it cooled down a little bit. It was at 83.2 and it cooled down some, so this is needed. This little red right here, this little red candle, it's right now at 78.60. All right, but still, this is not a sign of reversal just yet. Okay, the trend, as you can see, is intact. You can see 2 days ago we had a red day and then boom, kept on moving. Okay, so this is beautiful. KeyCat looking very nice. And dogging me. Look at dogging me. Let's go, baby. Best intraday performer broke triangle, heading for previous high. Strongest relative setup today. Out of 4 strong setups, Dog and Me might be the strongest. So I mean, all four are very strong right now. The charts are looking great. We just got to get past this little area right here of 2013. The hard part was done for Dog and Me. All this done, and then right here is less, a lot less resistance, guys. Dog and Me looking like it might want to run. All four are base narrative. Okay, with Coinbase entering the S&P 500, attention and liquidity will flow towards anything base related, including memes. And if you want me to expand expand a little bit on all that, let me know on the comments, and I'll do a segment in the next video just on the ramifications of what this Coinbase getting listed on S&P 500 means for base memes, for the base ecosystem, guys. It's huge. There's some huge implications there, guys. So my final synthesis and forecast for the next 5 to 10 days, we have a convergence. Okay, CPI cools, which means Fed gets breathing room. US-China tariffs drop, which means geopolitical relief. Bitcoin SPY and ETF flows are strong. Ethereum breakout, which means altcoin momentum is confirmed. Coinbase joins the S&P, which means base memes benefit. BTC levels to watch. Hold above 98.5 thousand would mean bulls in full control. A breakout zone means or equals to 108 to 112,000. We get there, then $120,000 is possible, boys and girls. Oh yes, and well, not to toot my own horn, but I have said, and I've been maintaining Bitcoin 200 to 250,000 this year. It's looking a lot more likely now, huh? Key risks. Let's keep a look at the key risks. RSI overheating, and we're pretty much there on a bunch of the charts as you saw. Yield spiking. We got to keep an eye on that. Tariff pause reverses. Let's see what happens there. This move has spot flow, ETF strength, and macro support behind it. If Bitcoin holds 100,000, the path to 100,000 is open, and memes are the high beta plays. All right, we're gonna leave it there. Guys, if you can, please like, please subscribe, please leave a comment. Trying to grow this channel and all that stuff really does help. With all that said, I will see you guys tomorrow. Have a good one. Peace.